learned from the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Fingers to the down, hold it.
Oh, so you're talking about magic, I hear. Well, let's talk.
All right, ladies and gentlemen, I was looking for a Harry Potter outfit, and I didn't have one, but I found my girlfriend's fur jacket. So it worked. But anyways, Powell lost the magic, man. We had Jerome Powell today. It was historic, and we have a ton of stuff that we need to talk about, but I think he lost the magic, and I think that's why it's going to be very important here. And what I mean by that is, like, it was the same Powell. The market went up, and it went up historically, but it wasn't the same. We didn't really watch Powell, walk the tightrope with grace. It didn't have the magic. I mean, it kept the market up. It was what most of us expected. There was a couple of surprises, but for the most part, where we react right here, it is really going to be determining over the next 2 days. So if you've been watching the watch list all week, you know what we've been looking for, and I'm going to talk about that. But even my expectation, that false bull rally, well, let's see what's going to happen here. But now, today was crazy. If you don't know what happened, you got your first double rate hike in 22 years, but now it gets better than that. Ready for this? Today was the biggest rate hike day gain ever, or at least in like 44 years. So pretty much after we did a rate hike, this was the biggest move that we've had. And you can see right here, this was 1978, where the stock market was dropping. They had a big rate hike, and then the market surged up. Besides today, this would have been the biggest point. And then, well, you can see where it went from there. But today, was absolutely historic. That was bad. Excuse me, my bad. I might have to keep that in. I'm getting nervous a little bit. But anyways, it was very, very interesting. It was very historic, and there is a lot that we need to take away from it. So drop your thumbs up on the video. Make sure you subscribe, and hopefully we see you on stream. YouTube.com/The Stock Market. We even on Twitch, anywhere you want it, bro. And y'all were awesome. So God bless you and thank you. That was a lot of fun today. We love the Powell days. But let me make this very, very simple. What happened today? Powell did two things that were very important, and then the third thing is kind of just everything else. But number one, he raised the rates by 50 basis points. Last meeting, we raised it by a quarter, and this was the first double rate hike in 22 years. And if you remember, January to March, everybody was freaking out. Oh my gosh, double rate hike. Well, in a weird way today, the fact that we got a double rate hike was bullish. So that was the first thing that happened. That was new. Number two, the balance sheet runoff. They said they will begin it on June 1st, and they announced the pace. And this one was actually kind of dovish, simply because they said they're going to like stair step or taper in to the balance sheet reduction. So instead of cutting it all at once, they're going to go 35 billion for 3 consecutive months, and then they're going to raise it there all the way to 90, so that it's slowly easing into it. So that was good. And then finally, this is like the extra stuff. He said he is highly attentive to inflation risks, or the whole Fed is. And then they were just talking about the jobs market, but mainly where they see the economy going. And now this was the big part. They mentioned China. And this one was wild because nobody was putting this on the roster for Powell to talk about it. And well, he dropped that in there, and I think that could be big. So those were the first main things. Now let's dive a little deeper. I'm going to show you what has changed from last time, and then we're going to talk about the 3 important questions, how they played out, and you could see a really interesting market reaction, more or less. But here is the readout, and this is the main paragraph that stuck out to me. You could go read all of it. This is the written statement that comes out at 2 p.m., but this is now highlighting both the changes and I mean, it's just wild. So again, cut out there in red, that is what was in the last Fed meeting, or the last Fed FOMC, and then in blue is what was new today. So what you could see they struck out, they said the implications for the U.S. economy are highly uncertain. Last Fed meeting, they said, but in the near term, they took that out. So literally how that reads today, the implications for the U.S. economy are highly uncertain, period. That's it. They said now the invasion and related events are, last Fed meeting, they said likely to create. They have changed that now to creating additional upward pressure on inflation and are likely to weigh on economic activity. Again, last time they did not say likely to. They said it would be likely to create or likely to have additional upward pressure. Now they said likely to weigh on the economy. And then look at this, all in blue. Nobody was expecting this. In addition, COVID-related lockdowns in China are likely to exacerbate supply chain disruptions. The committee is highly attentive to inflation risk. So again, the attentive part and then the China part. But this is where it gets interesting, because if you were listening while we were doing it live, a lot of questions kept coming up. Is this supply side inflation, demand side? Does the Fed policies affect supply or demand? The answer is they only affect demand. That's what Powell said. But think about that right there. This puts China in focus, and now you got Jerome Powell even bringing this up ahead of most people. This one's wild. So that stuck out to me, and that's why, too, I'm kind of like, all right, false bullish. Let's see what happens, because, again, last Fed meeting, it was an absolute rally afterwards, but those were the main things. Now, let's see how the market reacted, and let's go to the three main questions. So here they are. We said this live. So after we had 30 minutes between the release and the press conference, and then pretty much seeing this small reaction, here it is on the chart. It moved a little bit. People were getting excited, but it wasn't that crazy. And then we were saying, all right, what does Powell need to say? There was a lot of anticipation for Powell. It was exciting, baby. But here are the three things ranked by the order of their importance. Number one, will there be a 75 basis point hike? That is what we decided. After getting the double hike, market kind of reacting a little bit. There was nothing too big in the writing. The next big question for investors was, will we get a 3/4 point of a hike? And well, he answered that. And this is where it gets cool. I want you to see, because we called this out before, but literally right when every single one of these questions was answered, you saw a market reaction. So it was around like right here that they asked that. I think it was Steve Leisman, CNBC. God bless you, Steve. But he asked the question. Powell said they're not even thinking about it. It's not really there. Again, it reminded me of when Powell was like, we're not even thinking about tapering. And then before you know it, he started tapering. But anyways, that was good and the market liked it. That's why I said it was so funny, because literally, remember the first 3 months, people were getting out. I'm about to say a lot of things. They were tripping out about the rates and the double rate hike. Remember, people were freaking out, and now we got the double hike, and the fact that he said, nah, we don't have a triple hike, we were happy to take the double hike, and people were saying that this was bullish. Now, this is where it gets interesting. Market is still up. It reacted to that, but a lot of people astutely pointed out that even if there isn't a 75 basis point hike, if there is multiple half-point hikes, you could actually end up hitting a higher rate by the end of the year. So that one's very important. And then number two, and you can see here when this question was asked, again, after the answer, it led to the next little leg up. But number two, why did they add the China part? And pretty much Powell answered it by linking by linking Russia and China kind of all in the same breath, more or less. He was saying both of the issues, it's supply side. Oh my gosh, I did that again. I'm sorry. But he said it was supply side, and he said those are the bigger issues, and he just talked about it, how both of them are relatively new and added to everything. It's a risk. He touched on it lightly, but that was pretty much all he said. And then finally, the last question, this led into the final rally, and then they ended it, and then we had the close. Somebody asked him on the balance sheet reduction and why he decided June. So if you were watching initially, I was like, yo, this is good, because I was like, okay, they decided to announce the tapering. We have guidance. They gave us a date, but they started it in June instead of starting it today. They had the ability to. A lot of people don't realize that. Jerome Powell could have said, yeah, run it. Okay, we've made our decision. We're actually going to start the balance sheet tapering today. So he's giving us advance notice. That is good. But then when he was asked the question, he literally said there's no magic behind it. I know, no magic. He said it was arbitrary. I didn't believe that. That's it. Just to be honest with with you, it seems like too big of a decision to magically come up with that date. I think they had some reasoning. I think they want to keep it for flexibility. I don't know, but that was a very weird answer. But guess what? It was good enough for the market, and we started going up. So those were the main things. And now moving forward, these questions are going to come back, and we still need the digestion. And now the thing is, your Fed meeting is in a month. Last month, from March till now, we only had one Fed meeting. You had a Fed meeting, then waited, and then you had the one today. The next one is going to be happening here in June. So it's going to be right around the corner. We're going to be asking pretty much the same questions. Now we want to see, how does the market sentiment play out? How does this digest? And now you need the bonds to move, because they didn't do anything after all of this, but the market made the biggest move in 44 years. So hopefully you're following. It's crazy. Okay. There's a lot going on. And then just as a final, little fun fact, where is it? All right, here it is. You're going to like it. This one happened today. You may have heard it. They asked him, where is he at relative to neutral? You may have heard Powell said, we are a long way from the neutral rate. Does that sound familiar? He said it today, but here's the fun fact. In October 2018, when we saw the big drop, this was the wording gaffe that led to the markets getting clapped. Last time he said this, it caused a ton of volatility. So interesting to see. A little bit of a fun fact. Today was wild, and now, as far as everything else, we got to react to earnings and wait. There's going to be a couple more the next 2 days. It's really going to be all about the oil earnings. I mean, Twilio after hours, and a couple did good, but now, if you didn't see Apple, Amazon, even Facebook, even Airbnb, what we need to be watching for, these next 2 days will be pivotal. We want to see the digestion, and now, do good earnings carry the weight? Can even bad earnings go up? And that's going to really let you know, yeah, people are treating this like a bottom. It's time to start buying back in. Otherwise, if we do get the false bull and this lasts for about like next 2 days, we really got to see into Friday. But if you don't watch some of these companies that did good get rewarded, I mean, it is going to play out different, and then we got to watch the bonds. So that's pretty much it. I think the next few days are going to have a lot of plays. And now let us get into the plays. Let us get into the plays. There you go. That was better. All right, you like that one? Anyways, today I made a couple plays. I did sell out of that Facebook there at close. I don't know if you guys saw that one, but that Facebook, we got like 260%. That was following earnings, so that one was dope. Sold out of that. I forgot I did daily SPY puts. So I did a SPY daily this morning right before Powell, and then I grabbed a 408 put for 42 cents, and then I grabbed a 427 call for 23 cents. So total, I spent $65. And now the idea here was, if there was going to be a big move, again, I even made a TBT play related. We'll talk about it. But I said, man, this is a big event. Again, if the biggest rate hike in 20 years or the double rate hike, and then on top of it, this was the biggest post-Fed in 44 years. I was like, all right, before we knew that was happening, I was like, we need an opportunity. Wanted to keep it cheap, but I'm not trying to don't be delusional about it. It's a pure gamble. Again, it's possible, but not probable. And if you know that, you got to bet accordingly. All right. But that's pretty much what I went after. And then they ended up going up. The put got clapped. I lost that $42 there, but I sold the call for $1.10. It's like 500, 600% there. Not too bad. Got out of that, but only like a small, $40, $50 gain. And then this morning, I went both ways on TBT. I grabbed a June 27 call, 4 of them for 105. And then I grabbed a May 24 put at 45 cents. So pretty much long on the calls on TBT, short on the puts. And what would that mean? Calls on TBT means it goes lower. Puts mean that TOT would actually bounce. And this is what we were saying today. Even if we get the false bullish, I was talking about it. I'm expecting a little bit short-term rate rise. That would be like 2,000. And then otherwise, if it continues, it would pretty much get the long end. So the calls went down 20%. The puts pretty much went up a little bit. Bonds didn't do anything. I think we're going to see, and over this next day or so with digestion, if we get an early signal from the dollar or anything like that, I think we're going to follow through. And now, depending on how this bounce plays out the next couple days, there was big Europe sanction news. I'm going for EWG again, whether it's tomorrow or Friday. Maybe we wait till Monday, but people are asking. And like I told you guys, this is why we are playing defensive. I said it last time. It was going down. It kept running down. People are saying, do we buy more? I was like, nah. I like our position. We're barely up on it, but if it does have a little bounce like this, that's going to be our double dip. And well, it looks like it's showing up, so I hope you're ready. But That is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, you gotta be able to defeat. It's your heritage. Oh, let's go. But I love you, Chad. That's pretty much it. I just like jumped into that to wrap it up, but I'm very hyped. I hope you are too. We have more guidance for the rest of this month and maybe for the rest of the new quarter, but it's gonna get crazy and you need to stay in the game, baby. But I love you. God bless the Chad. Let's clap. Peace. I feel like a poke. All right, I'm out, man. All right, goodbye. I love you.